So first, let's understand the nature of fund accounting. First, we need to understand fund. So what is a fund? In governmental and non-for-profit accounting, the fund is a fiscal and an accounting entity. Each fund has its own self-balancing set of accounts that is used to account for its assets, liabilities, net assets, and inflows and outflows of resources, from which financial statements can be prepared. So we can view fund as a subset of financial ledgers, and we can use those ledgers for its particular group of assets, liabilities. In other words, we can separate the big, balance sheet into a set of balance sheets. We can call those funds, and funds financial reports. So basically, fund can help separate accounting, so we can make them for specific activities. Often, we want to separate the accounting because specific regulations, laws, restrictions, or other limitations require us to separate. And we're going to show results in a particular type of fund needing to be used. So in governmental accounting, we're going to talk about three fund categories: governmental, proprietary, and fiduciary. The first type of fund is called governmental fund. The governmental funds are used to account for most day-to-day public services of the general purpose government. Okay, it's for general purpose government. For example, for the states, counties, and cities, okay, these funds can be used to account police and fire protections, sanitations, parks and recreations. Those are the general purpose of governments. Government's funds are primarily financed by tax revenues, intergovernmental grants, and general fees. So these are the primary revenues for governmental funds. Governmental funds are controlled by a legally adopted budget. We're going to talk about budget in the next lecture. And there's no guarantee that the funds will be reimbursed for services rendered. Next fund is proprietary fund. Unlike the governmental fund, which is for general purpose, proprietary fund account for activities that operate in a manner similar to private sector business. So it's just like a government operating a business. It's for specific services. Okay, could be used for the transit, water utilities, or electric utilities. Proprietary funds are financed primarily by user fees or charges that covers both operating and capital costs. And so proprietary fund is also known as a pay its own fund, pay its own way fund. Okay? It's balanced by charging user fees. The third category of fund is called a fiduciary fund. Fiduciary fund account for resources that government hold in trust or custody capacity for others, for individuals, other governments, or private organizations. Okay, so in theory, these are the money belong to other people. For example, we have pension trust funds. Okay, government are holding monies for retirees, right? Investment pools and property tax collection for other governments. Okay, all these are fiduciary funds. So these are the three categories of governmental fund. Financial reporting. Okay, once we have the fund, we can report in the financial reporting. So we have the fund financial statement. So these are the separate set of statements for each fund categories. So for each fund, we have a set of financial statement. Okay. So basically, there are three sets of financial statements. We have the governmental fund, right? We have fiduciary, and we have proprietary. Three sets of financial statement. And together, as a whole, we will also have the government-wide financial statement. So it's just like a consolidated financial statement, combining all the funds together. So it includes governmental and the business type, okay? And of course, we have to make adjustment to accrual basis. We're going to talk about that because the accounting bases are different among different funds, okay? So it needs to be adjusted in order to have the government-wide financial statement. So let's take a look at a government-wide financial statement. So this is a condensed statement of net position similar to the balance sheet for a business. Okay, and as you can see, it's listed just like a balance sheet, starting from the current assets, long-term assets, right? Then current liabilities, long-term liabilities, and in equity part, it's called net position. Okay, for business, that's equity. Here we call net position. And we can see we have two types of activities for government. We have governmental activities, and we have business type activities. Okay, they're reported separately, and we have a total number. And another issue is if you look at net position, okay, we have net investment in capital assets, restricted and unrestricted. Okay, so we have categorized net positions. Okay, so here just give you a look. What is a government-wide financial statement? So we're going to talk about these statements in later. Now, let's talk about what are the elements of financial reporting. So what need to be recorded? Okay, we have seen some of those elements in the net position report. But let's talk about those elements. In government accounting, we're going to record the following elements: assets, resources with present service capacity. Okay, it's a very similar definitions for business. The liabilities, the present obligations to sacrifice resources. Okay, and we have this one unique to the government accounting, the deferred outflow of resources, which is the consumption of net assets applicable to a future reporting period. Okay? So, in analogy, that could be the prepaid expense for a business. Prepaid expense, right? And in government accounting, we call this deferred outflow of resources. Okay? It has been consumed, but we're going to apply this to a future reporting period. So for this period, it's still going to be part of the asset. Part of the asset should be that, right? And we also have the deferred inflow of resources. Deferred inflow of resources. These are the acquisition of net assets applicable to a future reporting period. Okay? Similar idea in business is deferred revenue or unearned revenue. Okay? The money has been collected, but we cannot call these revenue because it applies to future reporting period. Revenue belongs to future reporting period. For now, we call this deferred inflow of resources in government accounting. So it's a liability. Okay. So in terms of revenue expenses in government accounting, expenses are known as outflow resources. Okay, outflow resources. So the consumption of net assets are applicable to their current reporting period. And for revenues, we have inflow resources, acquisition of net assets applicable to their reporting period. The residual, okay, the residual we call net position. Okay, this is residual of all elements presented in the statement of financial position. So if you understand the balance sheet for business reporting and the statement of financial position will be very similar to that. So based on GASB statement number 54, funds balances of governmental funds are reported based on hierarchy in 5 different classifications. From the most constrained to least constrained. Okay? These are the 5 different classifications. Funds could be non-spendable, restricted, committed, assigned, and unassigned. Alright? So this rule applies to governmental funds only. Okay? Governmental fund. So non-spendable. means it's not spendable. It's in a non-spendable form, or are legally or contractually required to be maintained intact. Okay. For example, resources could be in the form of inventory and deferred outflows. So for sure, okay, they're not spendable. They're not spendable. Okay. So if we have the balances, we leave the balances in inventories or deferred outflows or any non-spendable form of asset. Okay, these will be reported as non-spendable fund balances. Restricted. These balances are constrained for a specific purpose by external parties. Okay, the key word here is external parties, through constitutional provisions or by enabling legislation. Okay, usually it's by their, for example, by donors. Okay, by another government, high-level government. Okay, or by laws. Okay, we cannot spend you cannot use those money. Okay, so restricted for specific purposes. That's restricted. Next level is committed. These are constrained for a specific purpose, determined and adopted by a formal action by the highest decision-making authority of the government itself. For example, we have a rainy day fund. Right? The decision is made by the highest decision-making authority of the government. So it's a higher level determining that we need to have a rainy day fund, and we call this balances committed. Okay. And again, the key here is it's determined internally. Okay, by the highest decision-making authority. Next level is assigned. So a government explicitly intends to use for specific purposes. Again, it's internally determined, but not usually by the highest decision-making authorities. It could be determined by the head of department or by managers. Okay, money is assigned for specific purposes. Okay, finally we have the unassigned. Okay, which is a residual classification for the general fund. Okay, and compromises all amount not included in other classifications. So this is the least restricted, okay, least constrained category of fund balances. It does not affect reporting fund balances by proprietary or fiduciary fund or net assets on government-wide financial statement. So these categories do not apply to other funds, and again, the government-wide fund. So here we have an example of fund balances reported for their governmental fund. Okay, again followed by the assets, liabilities, okay, and then the fund balances. By the way, this for government fund, okay, this report is known as balance sheet. Okay, the same name as a business. It's balance sheet for governmental funds. So the key here is going to look at the fund balances. It's reported by the level of constraint, starting from non-spendable, restricted, committed, assigned, and unassigned. So we have a total fund balances. And other formats are very similar to balance sheet. Now let's talk about measurement focus. So what will be recorded? Okay, what will be recorded? Measurement focus deals with which resources are being measured. For example, report on the determination of net income, financial position, and cash flows. So the first focus is economic resources focus. Economic resources measurement focus. Okay? And this focus is very comprehensive. It reports basically everything that is determining the net income, financial position, and cash flows. Anything that is causing the change in net income, financial position, cash flows will be measured. Very comprehensive. And another focus is a little bit narrow. It's called a current financial resource measurement focus. Okay? Under this focus perspective, we only report on the inflows and outflows of current financial resources. Okay, the key word is current financial resources. For example, cash or other items expected to be converted into cash during the current period will be recorded. Okay. Again, in terms of outflows, right? We record cash outflows for sure. We can also record current items expected to be paid, okay, to be paid during the current period. It's also going to be recorded. But this current financial resource measurement focus are not going to record certain things, especially those long-term things. For example, long-term assets, long-term liabilities. Okay, we're going to talk about that pretty soon. So the purpose of having this current financial resource measurement focus is to measure fiscal accountability. Okay, basically we want a measurement focus that's going to help us complete the budget, okay, to measure or fit budget accounting. So let's take a look. What is the effect of the measurement focus? So, for example, under the current financial resource measurement focus, if a government borrows $25,000 by issuing a long-term note and uses the proceeds to purchase a vehicle, the following entries will be proper, again under the current financial resources measurement focus. First journal entry with debit cash, it records the cash inflow, right, which is current. We also credit the proceeds from borrowing. Okay, unlike the economic measurement focus, here long-term debt is not the focus of the measure. Long-term debt is not focused on the measure because it's not current. We're not going to pay long-term debt in the current period, so it's ignored. Basically, it's ignored. Proceeds from borrowing is revenue-like accounts. Okay, So in this journal entry, we recognize a cash, an asset, and we recognize a revenue, a current period revenue. Okay, all these are current resources. Next, we record the purchase. Under the current financial resource measurement focus, we debit expenditures for vehicles, 25,000, credit cash, 25,000. Unlike the economic measurement focus, right? Under economic measurement focus, we need to debit vehicle, an asset, right? The vehicle is not focus of the current resource measures, and therefore it's ignored. And what is a current resources? Okay, we pay cash, so we spend money, and that becomes expense. So under the current resource measurement, that is expenditure. That is expenditure. So debit expenditures and credit cash. So this is a very important differences between the governmental fund accounting and other funds accounting. Okay, under the governmental fund accounting, okay, it adopts the current financial resources measurement. Basis of accounting. Once we understand what to measure and what not to measure, next question is the timing. Okay, when to measure. That is answered by the basis of accounting. So we have three bases of accounting. The full accrual basis, in which revenues are recognized when earned, expenses are recognized when incurred. And we know that because this is a basis for financial accounting. Another basis is cash accounting, okay, in which revenues are recognized when available, expense or expenditures recognized when paid. Okay, so obviously if you pay $10, that's expense. If you receive $10, that's your revenue, regardless whether revenues are earned or expenses are incurred. Doesn't matter. Okay, and somewhere in the middle we have this modified accrual basis, which is the basis for the governmental accounting, government fund accounting. So in which revenues are recognized when measurable and available, expenditures are recognized when incurred. Okay, this is the general rules. We're going to talk about details later. If you look at revenues, revenues are recognized when measurable and available. It does not say when earned, okay? It's measurable, so we know how much we will receive, and available. For sure, they have been earned. In addition to that, we have money available to spend. Okay, that's very important. So it's a combination of the full accrual and the cash basis accounting, and we're going to talk about the implication. What is a modified accrual accounting? Expenditures when incurred, very similar to the full accrual basis, but there are slightly different. We're going to talk about that later. So based on Gatsby statement number 36, financial statement will differ in presentation. Under the full accrue basis, okay, we have the following presentation: assets plus deferred outflows less liabilities less deferred inflows equals net position. Okay, remember this is a format for the government-wide financial reports. We have seen that, right? This is a statement also for net positions for proprietary and fiduciary funds, because for proprietary and fiduciary funds we adopt the full accrue basis. And as said, for the governmental funds we adopt the modified accrue basis. And here is a presentation: assets plus deferred outflows minus liabilities minus deferred inflows equals fund balance. They're similar, but if you know we are reporting the fund balances, okay, it's for modified accrue basis. So let's take a look at additional examples to see what is the modified accrue basis accounting. So company A records a credit sales of $100 and expect to receive the payment in the next period. Meanwhile, it incurs $50 expenses and plan to pay for it in the next period. Okay, as you can see, there's no cash transaction during this period. Okay, under the accrue basis, company A books revenue of $100 and expense $50 because both are incurred, recognized and incurred, resulting in profit $50. Under the cash basis, there's no cash transactions. The company booked no revenue, no expense, and zero profit. Under the modified accrue basis, will the company A book revenue? Look at company. Records a credit sale of $100. Yes, it's measurable. We know it's $100, but is $100 available for company A to spend to cover its expenditure? No. Company A does not book the $100 revenue because it's not available yet. But the company A will book a $50 expense because it has been incurred. And they're like, it's going to pay in the next period. Okay, so that's how we apply the modified accrue basis. Okay, and in practice, okay, there are still deviations, so we're going to talk about that. So let's summarize the measurement focus and basis of accounting for different categories of fund. For the government-wide statement, which is take a government as a whole, okay, the measurement focus is economic resources, and we adopt the full accrue basis of accounting. You know, we have three types of fund for government. We have the governmental fund. We adopt the current financial resources focus. Okay, and we adopt the modified accrue accounting. And for the proprietary and fiduciary, for both, we adopt economic resources, the same as the government-wide. Again, we adopt the full accrue basis, the same as the government-wide. Okay, so when we combine the three funds together to get the government-wide statement, as you can see, the only thing we're going to make adjustment is on the governmental fund. We're going to adjust the measurement focus. Also, we're going to adjust the basis of accounting. We don't have to make too much adjustment with the proprietary and fiduciary because they are consistent with the government-wide statement. Now, let's get into the governmental funds. It's a big topic. Let's see what are the different types of government fund we have and how do we measure them. Basis of accounting, we know it's modified accruals and the measurement focus, the current economic resources. So what does it mean? So in the governmental fund, we only include current resources. We only include current assets, current liabilities, okay, in the government funds. We don't have long-term assets or long-term liabilities in government funds. We only include, there's an exception, we only include long-term liability when they are due and payable. When long-term liabilities are due and payables, okay, we will record this part in the governmental funds. Otherwise, they will be ignored. There are three types of expenditures. We have operating expenditures, capital outlays, and debt service. And this is how we record these expenditures. Operating expenditures are generally recorded when liability incurred. Capital outlays. So when we acquire capital assets, we're going to record this expenditure. And again, when we have long-term debt principal interest due and payment, we're going to record the debt service expenditures. Okay, so these are the major expenditures we have. Again, we call these expenditures. Okay, try to differentiate these with the other funds, especially the government-wide, in which we call them expense. Okay, and here we call them expenditures. So, financial statement we have for governmental funds, they are balance sheet, the statement of revenue, expenditures, and change in funds balances. Okay, the latter is very similar to the income statement for business. To prepare their government-wide statement, as we know, the measurement focus and accounting basis are different, so we need to make adjustment. Okay, gonna make adjustment. Gonna adjust these to full accrual basis. So what are the different types of governmental funds we have? First, we have the general fund, and that's the fund we use to record our daily operations. That is the general fund. Next, we have special revenue fund. These account for financial resources that are restricted or committed for specific purposes other than debt service or capital project. For example, if we have a state grant for healthcare or gasoline tax revenues that must be used for highway maintenance, okay, usually they will be recorded in this special revenue fund. Next, we have capital project fund. This fund accounts for financial resources that are restricted, committed, or assigned to expenditures for capital outlays. Okay, capital outlays. Then we have the debt service fund. Again, these resources are used to pay interest and principal on long-term debt. And finally, we have the permanent funds. It's a trust-like fund in which resources provided that are legally restricted so that only earnings, not principals, may be used to support the government's programs that benefits the public. That's permanent fund. For example, a government received a donation to support one of its parks. Okay, the resources received here were to be invested, and only the income, not the principal, could be expended. Okay. And we're going to also see trust fund in fiduciary fund, and this permanent fund is a trust fund, but it's different from that trust fund because here it intends to benefit the public. Okay, intends to benefit the public. If we have a fund, a trust fund that is benefit only a group of people, or one or two business, and that's not a permanent fund. Okay? It's not a governmental fund. And here we summarize the reporting by the degree of constraint for the 5 types of governmental funds. So general fund usually will be reported in the form of non-spendable, unassigned. It could be reported as restricted, committed, assigned. Okay, it could be. And special revenues, usually they are restricted and committed. And debt services fund, usually restrict, committed, or assigned. Capital project, restrict, committed, or assigned. And permanent funds, usually they're non-spendable. But could be restricted, committed, assigned. Could be. The only fund that could report positive balance is the general fund. Okay, other funds we cannot have the unassigned positive balance. Other funds cannot have the unassigned positive balance. Let's take a look at example. How are we going to record these transactions in specific types of governmental fund? First, the district levies 9 million of general property taxes, of which it actually collected $8.8 million. Obviously, this is the government's daily operations, right? And levying and collecting taxes. So it should be part of the recorded in general fund. And we don't see any restrictions, right? So this fund should be recorded as unassigned. Second, the district received a state grant, 0.2 million to purchase computers. Again, we have a special purpose for this fund, for this grant. It's to purchase computers. So the special revenue fund is very suitable, right, to record this. Again, we have restrictions here to purchase computers, so this fund is restricted. Number 3, the district issued $4 million in long-term bonds to construct their school buildings. Okay. Obviously, we have a capital outlay here, so it will be recorded in capital project fund. Again, there's a restriction. Can only use to construct school buildings, so it's restricted. Number 4, the district transferred 1.1 million from its general fund to the debt service fund to make the first payment of both principal and interest that are due in the following year. Again, we know it's for debt service, so it will be recorded in debt service fund. And unlike the number 2 and number 3, the restrictions are from the government and from the bondholders, okay, are external restrictions. And here, it's internal restrictions, okay, because we're going to transfer the money to make payments to principal and interest. So they're not restricted, rather they should be committed or assigned, right? Okay, here's the suggested answers for those questions. All right. So that is the governmental fund. Now let's talk about proprietary fund. Remember, we have 3 types of fund for government, right? The governmental fund, proprietary fund, and fiduciary fund. Now we're talking about proprietary fund. Proprietary fund are using full accrual basis accountings. Okay, they operated like a for-profit business, for-profit businesses. So we're going to report all assets and liabilities, report expenses, including depreciation expenses, just like the business. Financial statement include a statement of net position, statement of revenue expenses, then changes in net position, and we can have additional one, the statement of cash flows for proprietary funds. There are several types of proprietary funds. First, we have the internal service fund. Okay, internal service funds are used to account for activities in which goods or services, goods and services, okay, are provided to other departments of the same government. Okay. So Department A is going to serve Department B. Okay, we're going to use the internal service fund to record those activities. So usually they're recorded on a cost reimbursement basis. Okay. Examples, for example, the central store, central computing, motor pools, and printing. All these are recorded in the internal service fund. We also have enterprise funds. It's also a type of proprietary fund. Enterprise funds account for activities in which goods or services are provided to the general public for a charge. Okay, internal is for government itself, and enterprise we record services goods provided to the public. So they're reported as business type activities in the government-wide financial statement. Okay, remember in the government-wide financial statement we have government and business, two different columns, and here, right, the business type activities are from enterprise funds. Examples include electric, water utilities, airports, parking garages, the transportation systems, liquor stores if they are operated by the government. Okay, we're going to record these things in the governmental in the government enterprises fund. Okay, the third type of fund is called a fiduciary fund. Right. Fiduciary fund account for financial resources in which the government is acting in an agency capacity. So it's an agent. But we're going to adopt the full accrual basis accounting. Okay. Accounting is very simple. Only two elements: assets equals liability. There's no net position because the government is merely an agent. Okay, it's in and out. There's no residual. Financial statement include statement of fiduciary net assets and the statement of changes in fiduciary net asset. What are the typical fiduciary funds? We have pension and other employee benefit trust funds used to account for resources, right, administered through a trust or equivalent arrangement for members and beneficiaries, public employee pension plans, retiree health care plans, and other employee benefit plans. We also have fiduciary funds, the investment trust fund, private purpose trust fund, and custodial funds. Okay, custodial funds are used to account for assets held, usually for a short period, on behalf of other government funds. For example, taxes collected by one government for the benefit of another will be reported in custodial funds. Now, after we go through all the funds types and the reporting basis, let's take a look at the comprehensive annual financial reports, called CAFR. So this is a very comprehensive financial reports, which has 3 sections: introductory section, financial section, and a statistical section. The main body is a financial section, which consists of the following paragraphs. We have the MD&A, management discussion and analysis. We also have this in the business financial reports, right? We have the basic financial statement, the government-wide, and the farm statement. So we need to report 2 sets of statements, both government-wide and the farm statement. And we have a set of farm statements, remember. And notes to those statements require supplementary information and combining an individual farm and financial statement if required. These are the main body of the financial section. So we're going to get into the crop in more details later. Okay, after we learn all the accounting for those funds, so then we're going to come back to the comprehensive annual financial reports, okay, to do more analysis. For now, let's just understand what it is. Now let's see our example. So the newly created State Recreation District established the following funds, each of which is a separate fiscal and accounting entities. So basically we're going to try to measure these transactions in different funds. Okay, different fund. What kind of fund we have? We have a general fund, we have a capital project fund, debt service fund, internal service fund. Okay. Transaction A. It levies taxes 300, of which it collects 250. It expects to collect the remaining 50 shortly after year end. The taxes are unassigned as to how they may be used. So obviously we talk about that. This is part of the governmental fund, to be more specific, the general fund. Okay, we debit cash, we debit tax receivable, we credit tax revenues, $300. And you may wonder why we're going to recognize tax revenue as $300. So remember the rule to recognize revenues, they're measurable, which it is, and available. Do we have $300? Probably not. We have $250 that is collected. But the key word here is the remaining balance will be $50 will be collected shortly after year end. Okay? Shortly after year end. So we're going to talk about that when we cover the general fund in more details. There's a 60-day rules. Okay? If we expect to collect those taxes within 60 days after year end, we're going to still treat them as available. Okay? Treat them as available. So here we're going to recognize $300 in full as tax revenues. Second, it incurs $250 in general operating expenditures, of which it pays $150. Now, expenses are recorded when incurred. So we incurred $250. So we debit operating expenditures, $240 total. So we credit cash $150, should be recorded right here, okay? Recorded here, $150. And then we recognize the current liability account payables, $70. Okay. Number 3, it issues long-term bonds, $500. Bond must be used to finance the acquisition of recreational facilities. Obviously, this is a capital project fund. We debit cash, and we're going to credit bonds proceeds. Okay, it's not bond payables because capital project fund, it's part of the governmental funds, and we adopt modified accrual basis. Okay, and current resources focus. So there's no long-term liabilities. No long-term liabilities. The district acquires $400 of recreational facilities using the resources available in the capital funds. Again, we're going to record this in capital project funds. It's a typical capital outlay, right? Again, we debit expenditures, not asset. long-term assets will be ignored. We debit expenditures 400 and credit cash 400, okay, for this transaction. And number 5, the bonds indenture requires that the district periodically commit funds to repay the district transfer 40 from the general fund to the debt service fund, basically. This transaction must be recorded in 2 affected accounting entities. And we know, first we need to transfer the fund out from general fund. Okay, so we debit transfer to debt service fund. Credit cash is going to reduce the balance, the fund balance. And for the debt service fund, we're going to do the opposite: debit cash and credit transfer from general fund. And this is going to increase the net position for debt service fund. And finally, it's internal service, right? Repair service acquires $10 of equipment, giving a long-term note in exchange. So under the internal service fund, we're going to adopt the full accrual basis. So we're going to recognize the assets, the long-term assets, and long-term liabilities. So we debit equipment and credit long-term note 10. All right, so unlike the governmental fund, fiduciary and proprietary usually are easy to record because we are very familiar with the financial accounting, understand the full accrual basis, right? So these are not difficult to record. But the key is the governmental fund. Okay, its modified accrual basis is very unique. Number 7, okay, then the internal service, the repair service is going to bill the district other department $15 and it collects the full amount in cash. The other department are all accounted for in the general fund. Okay, again, this transactions affects two funds, at least 2 funds, right? So for internal service fund, it's going to debit cash and credit revenue. Revenue has been recognized. At the same time, the service incurred cash operating expense is $12. Same time, recognize the expense for the transaction. Okay. So for this service, obviously there's $3 revenue, right? $3 profit for the internal service fund. In addition to that, for internal service fund, because it's under the full accrual basis, we're going to recognize depreciation for its equipment. So we debit equipment, depreciation expense $2, credit equipment, or better to use accumulated depreciation equipment, right? That's much formal. Accumulated depreciation for equipment. Back to the general fund, because the general fund is billed for $15. It becomes and paid $15. Okay, becomes expenditures for the general fund. So debit operating expenditures 15, and credit cash 15. And interestingly, because for the government-wide statement, we're going to combine all these funds together, right? Combine all these funds together. If we combine the internal service and the general funds together, as you can see, this $15 bill, the payment will, or the revenue, and these expenditures will offset with each other which left the net result. What happened? What is happening here is, right? As a government as a whole, the government as a whole, right? It spent $12. Spent $12. Incurred a $12 expense, right? And we're going to talk about that when we get into the financial statement, and very likely we're going to talk about that after the midterm. Okay, that's all for lecture 2.